Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Friday. What's up, everybody? It's Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. We've made it through another week. The week is coming to a close, and it's coming to a close with a little bit of momentum slowing down in the S&P, seeing a little bit of weakness. Yesterday, we had our live trade room, so some of the lines that you'll see today are from our live trade room. But remember, the lines we draw on the charts, we leave on the charts. So if you're new to the daily market commentary, the reason that we leave the lines on the charts is so that you can see how trades play out over time to take advantage of potential reversals and breakouts from an educational perspective. All right, let's dive in. S&P this morning, we're down 13 points. As we are definitely seeing a bit of a slowing of momentum. So we're coming into a little demand area here, but I've got a little note here that we put in yesterday. It says, beware of basing before the level, and I really have that, right? So we have a little bit of basing right here. So the reason that that's important is because let's say that I like this area of demand. Well, if I like this area of demand, my stop has got to go, at the tightest my stop can go would be about here. Right, and the reason I would say that the tightest that stop can be would be about down here would be that I've got this wick that I need to make sure I'm outside of. So I'd have this much risk in the trade. This would represent the amount of risk that I would take in that trade. And so I'm going to color that in red just so we know that we're talking about risk. Well, what's the commensurate reward that this chart is offering me? Well, I have to look to my opposing area of supply to look for my commensurate reward. Now, this isn't for certain where it will stop, but it is a pretty good target for that stop, right? So if I just do a reward the same length as the risk. So we'll put the reward in as a green line. So the risk is here, the reward is here. This point right there would represent about a 1-to-1 reward to risk ratio. So right now, this trade is offering me about a 1-to-1 reward to risk ratio, really slightly less. My kind of minimum requirement to see if a trade is worth taking is, does it offer me about a 2-to-1. I would like to get a 2-to-1 reward to risk ratio between the opposing level and my entry as really my minimum. A lot of people say 3-to-1. I'm okay with the 2-to-1, provided I have a high degree of probability, and that's why I have this as beware of the basing before the level. And you guys have heard it once, you've heard it 1,000 times. Basing is the kiss of death before a level. So just because I look at a level in the morning doesn't mean that level is going to be valid later in the day, because I care about arrival. I care about how we show up to the zone. So now, with that being said, I think we still may get a bounce out of here. But the bounce that we get out of there may be a bit weak and could set up for a potential breakdown below this level. So keep an eye out today for a potential breakdown below this level, as that might be worth looking at if we base inside this area, a breakdown, and then there's a little target right in here. So keep an eye on that one. The Nasdaq, we're looking at a potential breakout. On this one, we got a little bit of a pop yesterday out of that zone for a potential breakout, but that was in really the worst time of the day. Is we always, we kind of consider this the worst time of the day. So if you didn't take that breakout because it was our worst trading time of the day, then certainly nobody would fault you for that. And now it's starting to come down a little bit. We're seeing a little bit more weakness inside of this market. Got a little bit of an ascending triangle pattern, but that triangle pattern didn't give us a solid breakout. And it is showing a bit of momentum weakening. So I think that on this one, if we base down in here, you could get a little breakdown trade, target 1, target 2, if we do come down. But I would need to get the basing in front of the zone. Now, I'm not looking for a reversal short on here because we're so close to the all-time high. If I were looking for a reversal short, I still don't have a quality 15-minute level here to lean on. And so I think when we're this close to the all-time high, I don't want to look for a reversal short. Potentially a breakdown, but not a reversal. Crude oil. So crude oil yesterday, we had a little 15-minute zone that gave us an entry, moved away, came back, moved away again, and then it just so it gave us about a 2-to-1 reward to risk as far as moving 2-to-1 away. But then it came back and notice what it did in front of the level the second time. It based in front of the level, which is kiss of death, and we popped up through it. So the level itself worked pretty well for a little trade. And now we're continuing our move down. I think that we're seeing a significant amount of weakness, and then this is a great reversal trade and a selling pressure. I am totally okay with a more bearish stance on crude oil for the rest of the day, and frankly, heading into next week. I think the probabilities are, this is one where I think there's even a chance that we could gap down over the weekend, just based on pure price trajectory. Not for certain, but if you're going to trade something over the weekend, make sure that you understand how options work to minimize your exposure. Gold, we're seeing gold kind of give us a little bit of an upward price momentum. We've come into an area of supply right here on the hourly chart, but we didn't have that area marked because I didn't believe that it was a phenomenal zone in here that was worth taking because we had come so close to it twice and didn't get in. So without that level in there, my next really decent hourly level doesn't come into play until up here. I guess you got one right in there, but it's not a great time of day. I like this one up here from a time of, actually this one's, never mind. This one's just as bad as the time of day. So I'm going to remove that one as well. I really do. Time of day is something that is very important to me when identifying zones. And so I don't really love too many of these, actually. So a breakout to the upside is a potential from kind of where we are, especially if this pulls back a little bit. But keep an eye on this level down here, this 1560 area, because I think there's a good little opportunity in there. When I go ahead and move it to the currency markets, I look at our bonds, I look at our currencies. Here on the ZN, we see that our ZN level, we've got a supply level we're coming up to, so we could get a little reversal out of this zone. So keep an eye on this level for a little bit later today. We're getting a decent arrival into it, but be aware, if we start basing in front of here, it's going to be a level that's useless. In our Australian dollar, so in our Aussie dollar, so this is an interesting case where we had a 15-minute demand area. Now, this 15-minute area of demand, let's zoom in on it here a little bit, we came super close to the demand area. And everybody who knows how we trade these, if you come very close to the level, then that becomes a confirmation entry. That confirmation entry means that we only get long if price pops back up through it because we came so close and we had basing in front of the level. So all of those factors disqualify this level from a trade anyway. And then we had a setup for a potential breakdown right in here, but we didn't get the basing in front of the breakdown. So this is why rules of arrival are so important. Rules of arrival to these levels are something that I take very seriously when looking at these opportunities. And so now I'm shorting any rally back up, right? Shorting the rallies back up as they come. And the next area would be this one here. If indeed we can get that far up, we may not be able to get that high. When I go look at this on a 15, there is this little level here on the 15 that might be worth investigating. Once again, if we even make it that far up, we could continue to break down from where we are, and I wouldn't be too upset if somebody said, "Well, I know it's not a great setup for a breakdown, but I'm going to take the breakdown short anyway," because I think that the better opportunities are for price to continue to fall as we're in a much bigger picture downward trend. Looking at the euro breakdown trade is working very effectively. So those of you that took the euro breakdown trade from yesterday's room have been greatly rewarded as it's continuing to move. So at this point, take your stop, move it down, lock in some of that profits. If you didn't get in, I think you have a short opportunity right up in here if price does indeed return to that level. Canadian dollar. So the Canadian dollar breakdown, it has not done anywhere near as much as we wanted it to do. Yesterday, when we were in the live trade room, we were looking at this level. It gave us a little pop below. So if you didn't get in, it then came up and gave you another opportunity to get in. But we are not really doing a whole heck of a lot on this at the moment. So if you didn't get in, don't get in now. Wait for a potential reversal back up to this level, but the shorts still prevail. Looking at the Great British Pound and Japanese Yen, our Great British Pound levels, we don't really have anything close on our charts at the moment. And as I kind of look at this one, my 4-hour is very sideways. That's why I don't have anything in the near term super close, because I don't want to fight the 4-hour trend. Now, I will say that this breakdown is kind of forming right through here, so keep an eye on that as a breakdown. Similar picture in the yen. The yen, we actually had a setup for a breakdown. But once again, it hit there around 5 p.m., which is always going to be the worst time of day. One of the things that we do at Traders Army is we have a scoring sheet about the probability of our levels, and time of day is one of the things that we score, and that would actually take this that would remove this from contention as a potential breakout trade just based on the time of the day that the breakout occurred. Doesn't mean that the breakout's not going to work, and I think it still very well might. But this little move here is definitely going to have a lot of weakness associated with it. So now looking at the S&P over the weekend, just be aware that gap risk exists over the weekend. So anything you hold over the weekend, make sure that you understand the risk and the exposure that you take, and so protect that utilizing options. All right, everybody, hope you have a phenomenal day, and I will talk to you on Monday. See ya.